Hi, Warriors. Lunar eclipse day. How are you? Michael, Ryan, anyone see the eclipse? AJ, how are you? Forex gal sends me a lot of stuff that makes me want to hide under my bed. Ryan Varghese, how are you? Welcome to F.A.C.E. Okay, great. Let's go to work. Why don't we start off with a little risk off happening here? Then we'll get to FX. So there's your 4 hour. Last week I was talking about on the daily how the grinding nature of this blow off, that one bad day could change it. So we'll see if we get it this week. Just a guess. We really topped around the equinox. I know I'm talking about Astro stuff, but if you don't like it, too bad. Anyway, 5180 is going to be taking out the 9-day, opens up the door for a test of 5,000. I think that we're going to sell off between now and April 8th, 9th for either all of the correction or the first part of it. A natural place for it to go would be back to the breakout before we make an attempt for new highs. But I think 5,000 is pretty doable. And pointed out the NASDAQ was even weaker. It struggled to make a new high last week. It took the S&P's successive days. See that? So let's take a look at what the weekly off number would be, which means on Friday, and it's going to take quite a lot for us to have a 2-week reversal. That's 1784. That's about 1,700 points from here, and S&P's quite a bit too, 5127, 100 handles. So the way the 10-year closed Friday, I thought we might, that might have been it, but we're up again today, holding this 420 level. So I guess you needed a close, and I think you actually didn't quite close under there. Wow, look, a continuation head and shoulders formations that really don't exist. But that's possibly what you have here. That would take you to 465 on a breakout. Okay, so a weaker dollar today. Weakness led by cable, which led to the downside last week. When I bring in the team now, see who's around. I saw Ryan put out a message, good morning. So start with you, Ryan. As the dollar peaked, did it blow its wad Friday?
Morning, Dale.
Morning,
did it blow its wad?
I did. Don't currencies
I don't know about that. Get
Huh?
the tissues out. No, yeah, we hit some levels, didn't we?
Yeah.
Particularly euro dollar hitting that 108. Right in there. Tested it a couple of times. Held pretty solid. I did have a bid in there Friday, but I pulled it late Friday afternoon because I thought I don't want to get into anything that late in the week. But it's cable's bouncing a bit more, but none of these bounces look like they've got any strength behind them.
Just oversold because they were over. Just because it's they got oversold and they're trying to relieve
obviously
it.
Cable likes to stretch its legs a bit more than euro dollar. But it's for now I'm putting them in the dead cat variety bounce.
Okay.
Until cable above 126.50, euro above 108.40, then maybe we're turning it around a bit. But if we can't get above those levels, then it is going to look a bit dead cattish. But that yield holding at 420 that you pointed out, that's been the magic. That's been the magic line, hasn't it?
I think
for want of any big data, big news, I think that's going to be a guide in the early part of this week and moving forward. The dollar's going to react whether we're above or below that 420.
And Friday we have we have inflation news, right?
Yeah, PCE. Yeah.
Yeah. Okay. So that's part of the jigsaw puzzle this week.
Yeah.
Yen, any comments on yen? Any chatter at all?
Yeah, we've had some Kanda, the main FX guy over in Japan. He pretty much ticked the whole bingo card for intervention comments. He mentioned it all: speculation, fundamentals, that sort of thing. The only thing he didn't mention was volatility, really.
Yeah.
But yen didn't do anything. I think it dropped about a few pips on those comments. We're still all about the 152. That's it. You know, we're not far from it.
We never took
It's not
this
like
high
towards.
out, did we?
Yeah,
51.90. Okay.
yeah.
All
There
right.
still seems to be plenty of whether it's official, unofficial barriers or whatever. There's someone selling into 152. The big question for me is it official? Is it an actual level for the Japanese? They don't put numbers on it, but this might be a level that they want to protect and don't want it to get past.
Okay.
As I was saying on the flow show this morning, ordinarily any other pair, I'd have buy stops above that. But I don't want to have buy stops 20 pips above 152 and it trades there and then they come in and smack it 400 pips lower and it gaps down and I get stopped at 149.
Yeah.
You know, the risk for trading either side is just too high for me at the moment.
On the weekly RSI structure, this high here was weaker than, the fall of 22. And if we make a new high here over 52, even weaker. So, momentum at these new highs is waning. Bulls might say, wow, it's a breakout, of at least this range. And that would give you 64. And super yen bears would take it all the way down from here. And that's how some people are talking. I don't know, 170, 180. There are yen bears talking about numbers like that. I'm more in the camp of looking for a top than thinking that we're going to have a huge continuation move.
That chart there, if you, as I say, you could have that on any time frame and you think that's bullish. Okay, you had that big first high, it came all the way back down, it grinded up back up to the high again. The dip didn't even get, I don't think, to just about the 52, the 50 fib. So it hasn't broken, and then it's bounced from there. So, all intents and purposes, you think this one, could well head up to 155, 160, something like that. Except you've got the sword of Damocles hanging over it from Japanese officials. If that was euro dollar and that was a big level up there, yeah, I'd have buy stops all day above that level.
So much more sensitive to central bank chatter and action than, even if, Lagarde eases, you don't have the same kind of risk that you have if BOJ tightens. Great point.
If the ECB hike cut rates next week, you might get 150, 200 pip move. If the Ministry of Finance say enough's enough, they'll smack it for 400 pips before you can blink.
Okay. All right. K-Man here today?
No, he's off until Wednesday, I believe.
Oh, okay. All right. So any comment on the commodity currencies, Aussie, Loonie?
Yeah, it's all similar themes at the moment. That's bounced off that 65 level. 65, 64.80. You can see there the prior lows. But the bounce isn't strong. That move to 66 is all headline driven, event driven, Fed driven, whatever. And it couldn't hold above 65.40. That's my key level, seeing and holding above 65.40 rather than taking a walk and coming back again. So yeah, it's a coin toss. Above 65.40 and holding, you're looking bullish. Below 65, 64.80, downside is in play, and you might get your levels. I know you're looking for low 63s, I think it was, isn't it?
Yeah. So what's a couple of the trades that you're looking for this week? Do you have any plans for anything, or just go with the flow, like the flow
Yeah,
show?
I'm going to go with the flow. Just trade the levels. I'm in a bit of dollar mix still down here. You've got it there,
Okay.
down into those
Yeah.
lows. I was long 71s. I knocked some out 81s. I didn't know whether to keep it over the weekend. I decided to keep it just because it's stepping up off that low. So we had that first low down at 65. Yeah, then it just
Higher
stepped
low.
up, and then it just stepped up again on Friday. So, is this going to 18? Not at the moment. I'd like it be nice enough it just got to 17, let alone 18.
Well, if
just
the S&Ps
levels.
go to 5,000, it should, don't you think?
Oh, yeah, hope not.
Huh?
But hope not. I'm still long, but
Oh,
yeah, this one's.
you have the patience of Job.
I think K-Man said it a couple of weeks ago when I trade. It's more of a lifestyle than a position.
That's a great one. Yeah.
Yeah, S&P's. It's in no man's land here between that high, which we only had one. We've made one high. We haven't confirmed that high. We need to know where support is. You mentioned it, 5180s, 90s. That's the break point. Between 5260s and 5180s, it's wait and see where the levels show up. A bit of no man's land.
VIX gapping up after making new lows. No, who knows? Anyway, we'll see. I'm not looking for a crash. I'm just looking for a correction.
Loves that 1250, doesn't it?
Huh? Yeah, it does.
It loves that 1250.
Yeah. So, still has a lot of moving averages to get through, but I don't know. I wouldn't be short volatility. I just don't see a reason for it unless, you're making good money just doing this, but, then you have these when you're short, and even this, that was only, a month ago. So, people, it's been like really just picking up quarters off the sidewalk, selling volatility for, not just weeks, not just months, years now. So, the recency bias of doing that isn't going to change until someone gets hurt doing it.
Yeah.
So anyway, that's what I have. Blake, good morning. What's happening with you?
Hey, good morning, buddy. Nothing much. It is a quiet day. I was so bummed out today, Ryan. I got up early, and I went to listen to the Flow show, and you ended before I could get my fix in. But I know it's tough to when you only have yourself.
Yeah,
and the market's not moving a whole lot.
Yeah, but we get everyone prepared, showing what data's coming up this week, what's important, the headlines that have been and gone, and why it's important. So we get everyone ready for the week ahead, and then you guys come in and add to it.
Yeah, and here's the thing. Last week was a really, really, really busy week. Last week was like bonkers busy. This week feels like kind of
consolidation.
Consolidation or regurgitation week,
hangover,
something like that, right? It's like we're just gonna barf it all back up again. That's the kind of way I feel like this week is. Really, it's just more of a consolidation and taking in all the information that we had. But the one thing that I do want to point out is that stocks are they're just continuing to grind higher, and there is no, as far as I'm concerned, there's no change in any outlook that we should have. Stocks are coming off today. It's, you're seeing a little bit of selling pressure, but we're still in a very solid uptrend. There's nothing that I see technically that suggests that we should be doing anything other than going higher. Not saying that, you could, you look at the macro backdrop and you're like, well, we had some comments from Bostic this weekend who said he only sees one rate cut. And he's gone from he's seeing two rate cuts this year to now 1, but does the market really even care? I don't know. I'm actually, I think what's going to happen this year is we're going to find out that, yeah, we're not going to get a rate cut this year. Eventually, we're going to end up going all through 2024 without a rate cut, or maybe if there is one, there is only one. But I don't know how much it's going to rock the expectations are going to rock the boat at this point, because they could care less when we've gone from 6 to 3. So I mean, I don't know. The market hasn't cared at all. That has been the least of its worries at this moment. But anyway, so yeah, Dale, I mean, it's a quiet week. What are you looking at that has your attention? Because for me, I'll tell you, for me right now, it's the dollar still holding up really well. And it's still, when you said like the dollar index 106 is still possible, when you were saying that last week, I agree with you.
I still believe it.
Yeah, I mean, it's the Gartley pattern is still alive and kicking, as far as I'm concerned. And you look at the daily chart, and I guess as long as we stay above this 200 DMA and the 50 DMA right here, you can't really be bearish. It's pulling back this morning, but who cares? I mean, it's still constructive, right?
Yeah. I think you sell rallies in FX. Sell buy dollar weakness.
Yeah, we can look at the FX space really quick. I'm gonna just share with you all, if you didn't watch the week ahead video, just some of the key levels that are being held. Like right now, the euro hit the 618 retracement. I mean, it hit the 618, so we know that's really key. Sterling, channel support, and 200 DMA. We held it today. It's key. I mean, you just looking at the euro and the sterling, those two, just what I just showed you. Risk reward favors those who buy the euro or buy sterling, sell dollars right now. I'm not saying it's the right trade, but that is where your best risk reward is going to come in right now, is just being long these two at this moment. Now, you may not choose to do that, and you may say, okay, I'm really going to just be short. I'm going to buy dollars if those levels break. That's another way to approach it as well. Because if the euro breaks below, 108, if sterling breaks below, 125, let's just call it 125.50, we start breaking below there, that there's going to be some selling happening, because you can clearly see just by looking at those two currencies exactly where support's at. Like, I know where support's at. And if those support levels break, I know there's going to be pain for anybody who's long anyway. Same with the Aussie. I mean, 65 cents, right? You mentioned it this morning, Ryan. Really key level support. It's right there. If that breaks, I mean, the Aussie's going to probably have a really, really bad hair day, kind of like Dale. Dale, when you get a bad hair day?
Oh yeah,
so much like Elvis.
I have a lot of them.
Yeah, me too, Dale.
Yeah.
Ryan,
yeah. Not that bad, but
Ryan's bad hair days are when he loses his shaver. So
yeah.
No, but anyway, like the 65 cent level, I mean, that's really, really big, because one of the things that we've been talking about quite a bit is, doesn't matter if copper is going higher, doesn't matter if stocks are going higher. And I put this up on the week ahead video. So just, here's copper, here's the S&P. And if you zoom out a little bit, just, you can see this is the Aussie, this is copper, that's the S&P. You can see how strong the correlations have been up until, really the last 5 or 6 months for the S&P, and the last couple months for copper. So, if those two asset classes turn lower, with China, Aussie's going to get slammed. I mean, there's no if, and, or buts about it. What are you going to say, Dale?
Were you going to go the wand? Because I didn't even look at it today, and someone was asking about it.
Oh, it ripped higher last week. Ryan,
Right.
what did you come up with the? I mean, I think it's just for me, I think it's one of those levers that China just pulls from time to time. And we broke higher in the US dollar CNH last week pretty aggressively.
Yeah,
Matter of fact, we should find
he
support here.
got a spanking. He got a spanking overnight.
Wow. Yeah.
Which is probably the biggest spank it's had since state banks were apparently in selling dollars, buying yuan again.
Sammy Slammy is in the yuan pit too.
Yeah.
What's the name of that guy? The metals people call it. Someone slammy. You know, every time they hammer it. You guys hear about that? It's a meme. It's no big. It doesn't mean anything. Anyway,
they hit it with a sledgehammer this time, which to me suggests that they're not quite willing to let it go. You know, all the other, they've been intervening, it seems, for the last few months, last 6 months, if not more. But it all seems to be a smoothing, slowing policy rather than, you know, smashing it with a mallet. But that one last night looks like a mallet smash. Like, okay, you've had your move. Now we're keeping control of this.
You know, Tony,
go ahead.
Go ahead, Blake.
I was just going to say it's interesting that it just stopped right at the breakout point. And this is something that I don't trade. I don't trade it, and just because my brokers don't have it. Last I checked, anyway. So I just kind of stay away from it. But
you're missing out. It's a lovely currency to trade because when officials tell you what's what, you know what's what. If they say this has rallied too much or it's weakened too much, you know when to change your position. I've been short since 736, you know, last year.
So are you getting short here?
No, I'm still short 736 from last year.
Okay, wow. From up here.
Another lifestyle choice.
Another lifestyle trade.
You know what else is a lifestyle? Tony, please don't text your fantasies in our chat.
Hey, Dale, you were going to say something about the CNH a little earlier. What were you going to say?
I was? Oh, I just hadn't seen. I didn't check it out. So
got it.
That's all.
All right. Hey, couple other things that I think are a very big deal is obviously last week we had the Swiss National Bank that really just surprised everybody, right? So the one thing about the dollar Swiss is it obviously, or the Swiss in general, it's underperforming pretty much everywhere. You can see the dollar Swiss broke above the 618 retracement. That's huge. We completed the bull flag pattern. I would expect any dip now in the dollar Swiss, back to 89 cents, you got to be a buyer. I mean, if you are, unless the poop hits the fan, like in the movie Airplane, if those of you remember Airplane, it's like one of my favorite slapstick comedy movies, Dale.
That's before doors fell off.
Yeah. If the that is right. Boeing wouldn't really appreciate that right now. Anyway, the dollar Swiss, as long as it stays above 89 cents, I think it's bullish. The only thing that always worries me is if the market goes into some sort of risk off mode, does the Swiss pick up a bid? But as of right now, the Swiss is being engineered lower, and you gotta go with that. So above 89 cents, you want to be on the long side. Any dip to 89 cents, you want to be long. You look at the Euro Swiss, it was actually on just as we did this show or started the show. I had it on my screen. I started buying Euro Swiss on Friday, and you can see this green breakout point. We talk about it in the ForexAnalytix chat room. Like here's chat room. I got hit late Friday, more Euro Swiss long. I got, you can see, Wuju's getting long Euro Swiss, but I know Cayman was. I added more right over here. You can on Friday, so you can see we just started buying a bunch of it, and I'm long pretty aggressively right now, and it's holding where it needs to hold. I mean, these are big breakout points. You can see them just like that. So as long as those levels continue to hold, you got to be selling Swiss francs when you can find them. I'm also aggressively selling the Swiss yen, which has been more of a difficult trade because of what's happening with the dollar yen. But and as Ryan said a little bit earlier, Ryan, I have to agree with you. It does seem like there's some official offers around the a 152 level. Plus we have Tokyo CPI or national CPI, I'm sorry, on Thursday morning. That would be Tokyo CPI coming in on Thursday morning in Japan. So it'll be Wednesday evening. That's something else that should be on everybody's radar, because I think that's going to be whether we break out above 152 or not. And if we don't break 152, we're going to set up a big double top. That's going to be, I think, or triple top, or wedge pattern, whatever. I think that's going to be the big development moving forward. So anyway, here, let me just put that in purple so you guys can really see what I'm talking about. Right here, this is make that a little bit bigger so you can there. We'll be setting up some sort of big wedge pattern like that longer term if that doesn't break. But aside from that, S&P's grinding higher. You got the DAX. Look at the German DAX. I mean, that thing just launching. You have all markets that are really just still really well bid. Bitcoin's got a nice ascending wedge or ascending trend line that hasn't been broken, that's holding up very well. I don't know what to do about gold and silver at this point, because gold feels like a false breakout, but as long as we're above 2140, I wouldn't be bearish. Silver is just struggling at resistance, but everything else just kind of waiting. I think we're just absorbing all this information that the market's taken in from this last week. Dale, what's hot on your radar this week? What are you thinking?
Weeks like last week don't happen every week. So, last week was kind of decisive. The market's done nothing to change my mind from, the way things manifested last week. So last week is still in play for me. And I do think that we have topped in the S&Ps. And, I'm wrong over new highs, but I think we could have pretty good sell-off between now and, say, about April 9th.
Now in April. Okay, I mean, what's April 9th?
It's 6 days before you have to pay your taxes.
Oh, okay.
No, there's a solar eclipse.
Okay, there's a solar eclipse.
But it's not just because of that. It's because of the RSI structure in NASDAQ last week. It really took a lot for NASDAQ to make and only made a marginal new high compared to what the S&P did. And with everything happening, with all these investigations on some of the mega caps happening here, I don't think it's going to be helpful for the market. And then if yields don't take out 420 and head up again, I think that's going to have, especially if we take out 440, maybe on a PCE or something Friday. I don't think the market's going to like it.
Surely I can be serious, Tony, and it's nice to have Tony in here listening in. Tony, I agree with you. You lose a lot of money shorting this market, waiting for pullbacks, or just follow a simple rule. Wait for lower lows and lower highs. Start seeing a series of lower lows and lower highs before you start even considering being on the short side, versus trying to be a hero and unless we get some sort of blow off top, which again, I'll just give you guys the anatomy of a blow off top. You get above channel resistance, you hold above channel resistance. It's not a throwover. As Dale likes to look at those throwovers, you get above channel resistance and then you start making a new channel, but the acceleration is higher. So right now, as long as we're above 5170, which would be this lower channel support, you have to be respectful of the uptrend. But maybe we will find a top between now and April 9th, Dale.
Yeah,
but maybe it'll be at 5500.
Okay, now you see the RSI structure on that. That's a 4-hour. Put up NASDAQ, see what the 4-hour looks like there.
Yeah, no, well, okay, I will.
See, look at that. All right,
this is the S&P, but this is what happened last week. Just so we're clear here.
Yeah.
You saw RSI break down in the S&P and then turn right back around.
Yeah.
NASDAQ, yes, divergent, I get it. But we had, that breakdown and then reverse.
Oh, I don't trade chart formations on RSI. I just look at the readings. So anyway, that's a struggling market. That's been diverging for. Even though,
I mean,
even though
look,
it's a blow off.
I think the S&P is a struggling market, but they still grind out higher highs and higher lows, and it's indicative of a bullish market when you have that higher high and higher low, regardless of the strength. Because we could have said that the market's been divergent, like the S&P has been divergent since we hit 4,800 in this particular example. So I hear what you're saying. I think we're probably near a top. And I bet you if you shorted the market right now and you closed your eyes for 6 months, you'd probably open your eyes and be happy that you did. But right now we still continue to grind out higher highs and higher lows, and it's just it's hard to step in front of it. Right now channel support comes in at 5170, and just be respectful of that, which is about roughly about 50 points away from where it is.
Where's that red line up on top that you have there? 52 even?
Where
just a horizontal line at the top of the market. Just a red line, horizontal line. No,
this one,
no, at the top of the market.
Middle of your
Make
channel.
it bigger.
Top of your channel.
Oh, you said red line. I'm like looking for a red line. The top of the
there's
channel
a red line
here,
right there.
The blue line is 53.
No, the red line underneath it.
Oh, the red line.
There we go.
Oh, this one. Okay, you're talking about that one. I'm sorry.
Yeah, it's all right.
I know where you are, Dale. I know where you are.
Yeah.
That's today's support at 5,200. Like we put inside.
Big round number. Okay, thanks.
Yeah,
bro.
We put it inside right here.
Peter Bookvar's here.
Oh, it's already that time.
Yeah.
Time flies when you're having a great time. All right. Well, guys, Peter, welcome to the show. Dale, I'm going to pass you over to Peter and Ryan. Good luck. I know K-Man's going to be out tomorrow as well, but good luck on the Flow Show, and we'll be listening to you in there.
Thank you.
Yeah, you have to wake up half hour earlier.
All right. Cheers.
Okay. Thanks, Ryan. Thanks, Blake. Welcome back, Peter.
Hi, Dale. How you doing?
I'm doing pretty good. I'm, was looking forward to talking to you, and I'd like to open it up with on a prior interview you did on Real Vision. You said the Fed was in a cage. I mean, a box.
Yes.
So why don't you explain to everyone here what you mean by the Fed being in a box?
Well, let's be clear that they put themselves in the box and now are having a difficult time figuring their way out of it.
Okay.
Because you have inflation trajectory coming in their direction in terms of moderation. I mean, we touched 9%-ish in the summer of 2022, and now we're call it 3 to 4. So the direction is in their favor, but the problem is keeping it here. The Fed. One of the things of the 1970s was it was one thing to have inflation fall, but but what didn't happen is inflation didn't stay down, because we had price controls that temporarily suppressed inflation. Central banks Fed got complacent. Inflation accelerated again. Inflation came back down. Right. So you just see like the same mistakes being played out. Jay Powell is saying we don't need to wait until inflation comes down to 2% before we cut interest rates.
Right.
Well, that's the problem with that is that the inflation battle is won when inflation comes back down to around their range, their arbitrary made-up range. But the war is not won unless it stays there. And Powell's just trying to get cute here. Now, I understand what he's thinking. The unemployment rate, even though it's still historically low, is at a 2-year high. He wants to just do a little trimming well before the election. So I get what's going on in his mind, but and he sees what's happening in commercial real estate and so on and so on. But then on the other side, we should all see what's going on with financial markets, and the embers of inflation on the good side potentially rising again. Look at the CRB index. Look at the CRB food index in particular, which is really moving higher, and the raw industrial index. And you have the potential signs of manufacturing bottoming out and potential inventory restock that may start to happen, which would lift goods prices. Now, on the services side, I do expect inflation there to continue to moderate as slower rents work its way through. But I think the point being is that I think Jay Powell has to be really careful here. And yeah, give him a cut here, give him a cut there. But should the market be so excited that we're going to get one or two cuts? Now, I know the market mentality is when the Fed moves, they continue on in that direction. But I think that higher interest rates for longer is not just a cliche now, it's for real. And I think that people are not appreciating that, I don't think.
Okay, so you think he'll go with a token cut in June, and do you think he's
well, it depends. There's a lot of data between now and then.
Yeah.
If oil goes to $90 between now and then, it's going to be quite tricky to him to go even.
Yeah, gasoline has been going up pretty good, hasn't it? Diesel especially.
And Raphael Bostic, who votes, said he doesn't want the first cut until the latter part of this year, and he votes.
Okay. Yeah, here's crude trying. I mean, it looks like it's, trying to come out of here, and it wouldn't take much, especially with, what's happening in the Red Seas, plus shipping rates, right? Supply chain costs because of the Red Sea for everything. Those rates are going up.
I encourage people to go back and read also the S&P Global PMI on Europe, the Eurozone, and even the UK, and read all about the price pressures that are still around. Enough to tell you that inflation is far from dead. And again, while it's certainly moderated, goods prices have moderated back to zero, and so on. But to get complacent on inflation is a big mistake. And again, too many people think that just by seeing the downside of inflation, that somehow this is the end of this inflation fight. I mean, when you think about so inflation is going to go from 2 to 9, magically come down to 2, and just stay at 2.
Yeah. So, I mean, the 70s narrative or analog could play out where, it took 3 times. 3 tightening cycles.
And if we have the Fed follow through on their dovishness, at least Powell's dovishness, other members of the committee that are clearly
doesn't the 10-year kind of at a very important point? This 420, Peter's been a pretty significant pivot, above it looks pretty bullish, underneath it looks bearish, and we broke back above it last week before the Fed, and we're sitting right at 420. Is your bias, we didn't even get halfway back from this decline, which is 440. Your bias that this 440 holds and we maybe even trade 460 over the coming months?
In the next couple of months, I don't know, but I do think we're going to be retesting that 5% level that we saw last, call it October, early November at some point. So,
so you think we'll see 6% of 5% before we see 380?
Well, 380, interestingly, was where you were in July of 2023, right before the BOJ decided to widen yield curve control before obviously eliminating it. So that's what triggered, and I believe, the 10-year move from 3 3/4-ish to 5. So going back down to that 3 3/4, 380, now that the BOJ is out of negative rate policy, has eliminated the YCC, and inflation is beginning to perk up on the good side and commodity side, I do not think we go back to 380.
Okay. Also,
before you go to 5.
Okay, that's a firm call. And what do you think, BOJ? Everyone's following every word uttered coming out of there. We're testing recent highs going back to last October? You have any kind of view on the yen?
So the yen certainly has weakened here because there's frustration that while the market got what it wanted in terms of monetary policy, I think now that you've sort of fed that, now people wonder, okay, rates are still at 0 to 0.1% on the short end, and God knows when they may raise them again. So I think there was some sell in the news. What they did was well telegraphed, but I do think that the yen is an interesting buy here. I think that the BOJ could hike again this summer or in the fall. And while those rates are still going to remain well up below the Fed, certainly, I do think that the Japanese economy, Japanese stock market has certainly done very well with it back to its
parabolic
highs from 1989 in nominal terms. I think the yen is interesting here to be buying in this pullback.
Okay, maybe we have to take out the highs from 22, which we haven't done yet, 51.94.
Maybe
so
to stop some people out.
Yeah, it's kind of a stop hunt above there. That's interesting that you're calling for that. Let me ask you this, Peter. Congratulations on being a long-suffering precious metal bull. Did you and the guys in your office do a cartwheel when we broke to new historic highs?
As we're long, we're happy, but after from being teased as many times as we have over the many years, there's no room for complacency being a bull in precious metals.
I mean, that's a pretty powerful
particularly
signal.
Also in silver, which is still 50% from its record high.
Right. Yeah. I think we're at, any pullback now in silver, if we get one to 23.5 or any pullback,
or say 50% under its record high. So
okay. Yeah, and any pullback if the dollar has, another burst left to 106, which I think is possible, you got to be long. And even the miners turned, Peter. I think, I'm not sure if you were buying the miners. They really they had a baton death march, okay, and nice initial first wave out. So I'm telling people to prepare that if we get a pullback, some kind of FID pullback in here on any of these, even Newmont, which, took away their dividend, or silver junior miners, they all look great. And if there is a pullback, to me, I think it's the last bus stop. And that's what you mean by not being complacent. And maybe even I am thinking there could be a pullback, but the market looks great.
Dale, we've been doing this long enough that humility is an important characteristic.
Yeah. I mean, you have to respect the power of the market over the power of your decisions. So really try and teach people that. So great call on the metals, plenty of room to run. You're looking for maybe like 2,400, 2,500 in gold?
Well, if you inflation adjust the 1980 high of 850, gold would be 3,200. So to me, 2,500, to me that's just an easy do though.
Layup.
Easy in parentheses.
March Madness slam dunk.
Now technically, I know it's not going to be a straight line. To me, a lot of stair stepping that's going to take place, but just take a step back and just look at how well gold has traded over the last couple of years in the face of most aggressive monetary tightening in 40 years and a very sticky dollar. But we know why. We know central banks have been buying in hand over fist. China in particular. China's been the biggest foreign central bank buying gold. And Western investors via the ETFs have been selling nonstop, and gold keeps going up. So you draw a chart between the price of gold and ETF flows. Since existence, they pretty much followed each other up until the last couple of years when gold has continued to go higher and ETF flows have shrunk. Just imagine if the Western investor starts to get distracted from Bitcoin and starts looking at gold again. ETF flows combined with all that central bank buying, there's a lot of potential here.
And I just interviewed a mining analyst, and she said that silver is the most hated metal of people don't even want to talk about silver anymore.
It's shocking the level of apathy in silver. It really is, when half the demand is industrial. So we're sort of putting away part of silver every day.
Yeah, it's like someone checked my stream, posted I think a monthly. It's like in a triangle. It's like a coiled spring waiting to break out. In fact, if you just take the numbers, call this, on the weekly, get a breakout over 26, and you just measure it from the COVID low, which was, call it 12 to 30. 18 over 26 gives you 44. So that's just a measured move. Who knows what it could do?
If you do the sort of amateurish back in the envelope gold to silver ratio average,
oh yeah, here
going
it
back
is.
to the 70s is about 60 times, and just to get back to the average, you're talking about $35.
Okay, I know a guy, another physical guy, says before it's over, the gold silver ratio is going to be under 30. So very bullish silver. What do you make out of this copper breakout, Peter? Is it a sign of, maybe another sign that, economies aren't dead, China's not dead, and just demand for copper looks pretty good if it holds this breakout? Not as good as the precious, but is there a message in what copper did over the last 2 weeks or so?
I mean, I think it's both demand side and supply side. I mean, people want to talk about China for sure, but I don't think there's enough appreciation for the amount of money that India is spending on infrastructure. The spending in infrastructure in India is extraordinary. It's in the trillions, and it's really transforming parts of their economy in terms of transportation, and getting from point A to point B in 2 hours instead of 7 by building new roads, the electricity grid. There's a lot of exciting stuff going on in India, but even in China, while a lot of copper is not being used in construction, residential construction, still getting plenty being used in just electrification of just about everything around the world. Then on the supply side, there's still continued issues. You had Panama that basically confiscated a mine that was one of the bigger ones around the world. We've had talk about China over the past couple of weeks. Their smelters cutting back on purchases. So that there's the setup for much higher copper prices as well, for sure. And I think it gets back to the whole inflation discussion, is that commodity inflation is perking its head up again. And my theme over the past couple of years is yes, I was expecting higher inflation, which we got, but now with the dip, I'm expecting just a lot of inflation volatility. I think, like I said, we're not just going to magically go to 2 and just stay there, and we're not going back to this tranquil period of suppressed inflation for an extended period of time. There's a lot of inflation volatility to expect.
Yeah, and so you have to equate that with rates. I mean, things changed. The end of a 30-year bull market, and the worst bear market I've seen in my lifetime in bonds. They've kind of stabilized. You have a view on the longer end of the yield curve. Here's TLT. We had this rally where, to me, right now it looks like it could be correction. You think we're going to new lows, or there's another leg higher coming in bonds, which would, I mean, it could rally to 120 and still be a bear market rally from this slaughter. And what do you think?
Yeah, I mean, we can. I still think that we had a 40-year bull market in bonds after a multi-decade bear market in bonds. I mean, bull and bear markets in bonds don't last a few years; they last a few decades in trend. So we're in a bond bear market, and we're going to see higher yields over the coming years on the long end. And the interesting day was last Wednesday when when Powell was dovish, and you saw the 2-year yield go from about 467, 468 down to 460-ish, and then now we're call it which is where we are right now. Responding to that dovishness, but the 10-year yield is that day did not budge, and inflation expectations actually went up to a 1-year high. If you look at the 5-year, now we backed off a little bit in the 10-year. We're now at like 4.22. But if the bond market thinks that Powell is mistakenly cutting rates too soon, they're not going to like it. And if you put up a chart in the 5-year inflation break even, and it went up when Powell got dovish. So this is actually, I'm looking back, we're at a 1-year high in the implied inflation break even 5 years out. Because if I'm long the long end, I don't want a soft Fed. I want a tight Fed.
Right. Okay, so that's an interesting observation. This was the day in TLT. I mean, there was no confidence in the bond market that day. It rallied since, but this was the reaction on the Fed day. Why don't we wrap it with the dollar here, Peter?
So I think it's important to, and I've always said this, that we talk about the dollar and homogeneously it's either up or it's either down. And the strength has really been against the yen, the euro, and the pound. You look at and putting aside, the Turkish lira, for example, or even the Chinese yuan. You look at the Mexican peso.
You're right.
I mean, talk about a strong currency. So if I look at the DXY, I can say, the dollar's trading okay, even though it's really in a trading range. If I look at the Mexican peso, I say, wow, the dollar trades like crap. So you have to be really just more discerning in what you compare the dollar to. If you look at the dollar versus the US dollar versus the Canadian dollar, the Canadian dollar has been trading in a range for years now. So the dollar is neither strong nor weak against the Canadian dollar. It's been in a range. So it's important to really say, okay, the dollar's been strong against the yen, but it really has more to do with BOJ policy than anything. You look at the euro, for years we've been trading in a 105, 115 range in the euro. So the dollar's no great shakes here when you look at the issues and challenges that some of these other countries face.
Well, being a commodity bull, I would think that you might be looking for a spot to buy the commodity currencies like Aussie. Maybe, maybe you could get it down here. Would you be interested in any fiat? I mean, Mexico, I don't know how the real has been acting, but does Australia interest you since they are
at these levels, no doubt. I mean, the Aussie dollar is trading, sort of constantly is in this tug of war between, commodity prices on one hand, but now trading with the sort of the attitude towards the Chinese economy and its weakness. So it's right now it's getting tugged in either direction. I do think with the Chinese economy that, they're dealing with the residential mess that's on their hands. And if you do get this global manufacturing restock, Chinese manufacturing will recover as well. And that combined with some life being seen with the Chinese consumer that, the Chinese economy may be okay, and that could help the Aussie dollar along with the rising commodity prices. So to me, the Aussie dollar is pretty intriguing here.
Okay, here's a Nikkei. I wouldn't be long Nikkei anymore. I wanted to just bring up one of the most benign parts of commodity inflation over the last couple of years since the invasion of Russia into Ukraine has been the grain complex. And they've been under, a lot of pressure for quite some time, and they're showing signs of a bottom. When we don't have a lot of carryover in any of these, and I remember being, across the street from the Board of Trade when they used to say beans in the teens. But if we have a bad crop and grains start to go, that could really add jet fuel to the commodity argument, not just things like cocoa.
I agree. So about a month ago, so we were on the fertilizer stocks.
Okay.
going into the Russian invasion of Ukraine, obviously not having any idea that was going to happen, and that was not why we were long it. But on that spike, we sold. And about a month ago, I was looking at the spec non-spec, or I should say spec non-commercial positioning in corn and soybean futures. And about a month ago, they hit a record high short.
Okay.
And I said, and that was when corn was around 4 and soybeans were around 11-ish. And
how are you going to play it? How you're not
so
going to buy?
So we bought fertilizers. Fertilizer stocks have fallen 50% from that Russian invasion spike. So after seeing that futures data and seeing how much prices have come in, we bought back our fertilizer stocks.
Okay.
As a play on ag.
I tell you, that's I don't think we left anything out today, Peter. And if you want to know about what Peter's thinking, besides every 3-4 months when he's here edifying our community, it's free. Just sign up here. The book report. It's on Substack. You could find.
Can I tell you one more commodity, Dale?
Oh, sure. What do you want to talk about?
Natural gas prices have tanked.
Oh, yeah, you're right.
And I'm watching every week the rig count, and the drillers are laying down rigs, and they continue to lay down rigs. Okay. So I would have my eye on natural gas prices. Just looking.
The stocks look much better than the commodity.
Yeah, they have.
Look at some, because we're at historic lows here right now. And the stocks are not making new lows with nat gas. So I think that's a bullish sign when the equity of a commodity is outperforming the commodity.
Yeah, so a year ago, yes, 100%. So a year ago, the rig count for natural gas, so call it in March of 2023, was about 160 rigs. Now you're down to 112. 112 was the lowest since January 2022. So you're to call it a 26-month low in rig count. And so I would just keep our eye. I'm not trying to pick a bottom here in nat gas. I'm just saying that I think low prices are in the process of curing low prices.
Right, just like high prices do sometimes.
Yeah,
like
so
people were talking about
gas.
Yeah, like uranium. Everyone was saying there was no supply. And then there was a correction in uranium. So, great eye, Peter. I tell you what, you really, Peter. I'm a fan of Peter's, so go ahead and subscribe.
Thank you, Dale.
He not only helps institutions. It's going to help you as a trader to have Peter's narratives of what he's looking at, in my extremely accurate and humble opinion. So,
thank you, Dale.
Peter, my trading warrior brother, we've been talking for years. I want to thank you for coming here and edifying the F.A.C.E community all that time.
I appreciate having me on.
All right, Peter Bookvar, everyone. Follow him on X at @PBookvar. And that's a wrap. You could join the team in 15 minutes on the Morning Edge. Adios, everyone. Get ready. You had the lunar eclipse, and get ready for that solar eclipse. Hey, Peter, you still there? No, he's gone. Anyway, I'll see you, everyone. Good hunting. Yeah, Peter's great. All right. Thanks, Barry. See you, Patrick. You're welcome. Don't just count your pips, count your blessings. You hear that, Adam? You too, Bruno. That's an order. Okay? It's an order, not a request.